my business is based on, which is providing career opportunities for the next batch of trading talent which are coming through the retail world. So that's what I'll be going through today. How, as a retail trader starting out, or maybe even you've got a little bit of experience, and what's the career path? What are the career opportunities for you? How long is it going to take? All that sort of stuff. So first of all, a disclaimer. All of this is, of course, my opinion only. I am not an expert on every matter in the market, and so please take it as such. Now, just briefly before I start, I will just show you my website, which is this one, fxww.com. Look, at the end, if you have questions, which I'm sure you will have, it's probably best if you just contact me here via the website, ask me your questions, because they will probably be very exact to your situation, and it'll give me a little bit more time to answer, rather than just trying to answer on the fly at the end of this. But of course, it'll take about 45 minutes this particular webinar, and you can ask me a few questions at the end, of course. Now, I expect this to be in two parts. This is too much information, I think, to go through today in just roughly 3/4 of an hour. So I expect today we will discuss more the how you get started, the early part of a possible career, and then next week we'll look more at how you can get into the bank world or into the hedge fund world. Right, so just a few words on myself first. I straight from university started with a German bank in Düsseldorf in about 1986, and I trained initially on forwards and options, and ended up on the spot desk as a spot foreign exchange dealer. And worked away there for about 15 years with various different employers. Now, the nature of the business is such that it's generally seen to be a young man's game, and spot dealers were traditionally by the age of about 35 looking for a new career. And I followed a pretty similar path, but when the bank felt that my days as a spot dealer were over, I didn't necessarily agree with them that my career was over. So I set about creating my own trading business. So I set up my own I started to set up my own hedge fund in about 2000 when I left the bank, and for about 2 years created a track record for myself. And then I wanted to promote myself to professional investors. And I did this all. I thought pretty well. I had 2 very successful years, and then started going around marketing myself to professional investors, and realized that I was entering a completely different world. The funds management world is completely different to what I had experienced in Treasury, and it was a very steep learning curve for me. They were talking about terms that I'd never heard of before. I thought it was simply a matter of making money. Can everybody hear me? If anybody's having a problem hearing me, can they? Okay, it seems the sound is fine. Where was I? I was introduced to a whole new set of language in funds management that I'd never heard of before. I thought it was simply a matter of being profitable, and you're profitable and you turn up and people give you money to manage. And that was not what happened to me. It was, as I said, it was a very steep learning curve, and from that was for why I started the FXWW business, to help traders who are good at what they do make the move from trading into funds management. And now, not that I was going to be providing with all the exact advice on everything from licensing to accounting to marketing, but I could source the necessary resources that people could promote themselves properly. They could concentrate on their trading, do what they do best, and then have other people package them together in the right form. So that was the beginning of the FXWW business, which was in about 2003, 2004. I set this up, and yeah, and then here I am today. So I'm going to start with yeah. So looking at most of generalizing here, but most of the people who are listening to this webinar are going to be retail traders who've been trading for themselves and feel that they have a talent, and that from this talent they can go on to make a career in the foreign exchange market. And yes, I believe you can. Remember, when I started in banking in 1986, there were, I'm picking a number here, like 1,000 banks around the world who were, involved in the foreign exchange market, and each training 10 or 15 new people every year. Now, this is not happening anymore. The banks are not training very many. Of course, they're still training a few, but not very many. So most of the new trading talent is going to have to come from the retail space. So you're going to have to, get your own education in a way, learn how to trade, and start your own career on your own without the help of a bank. So in 10 years' time, most of the top traders and hedge fund managers and analysts and strategists are going to come from the present crop of new retail traders. So yeah, you need to set yourself apart from everybody else. And yeah, so let's go up to the top here. If you can see what I've written here, there's the three things. I think it's an important place to start. You understand your strategy, understand your risk profile, and be consistent. So we're not thinking here, there's a difference between being a good trader and making a career as a professional, either strategist or money manager. Some of the best traders in the world would frighten away every potential allocator because their swings are just too fierce. Yeah, they take big bets, they take big losses, and they make big profits. The problem from an investor's perspective, excuse me, the problem from an investor's perspective is that they do not know when this particular trader is going to suddenly go into a big drawdown and have a big loss. So if you are the type of trader who's a big punter, your chances of success in money management are limited. Now, so I'm sorry to disappoint you on that one. What I will say is that in the retail space, you will find investors who are much more willing to back a, if you like, a punter. I don't like using that term, but there are some traders who have just got a different profile, who are really, really aggressive, and when they make profits, make massive profits, but can also have big drawdowns. That type of trader will have no success in the institutional world. He will not get any money. But, the retail world is a bit different, and I'll come on to that shortly. You can, as an aggressive trader, you can find some people to back you. But in the main, let's look at this. You need to understand your strategy. What do you do on a daily basis? You need to be able to not only understand it, you need to be able to write it down in coherent language. Sounds simple. You'd be amazed at the number of really top-class traders I've come across who are unable to tell me what they do. They say, I trade foreign exchange. Okay, well, please tell me on a daily basis what you do. And this is sort of beyond them. So that's, first and foremost, you need to understand what you do, and you need to be able to write it down. Secondly, you need to have a risk management profile. Once again, look, this is pretty simple. You need to be able to write down what it is, and it needs to be consistent. Both your strategy and your risk profile needs to be consistent. So that doesn't matter whether you're starting off trading or whether you're a very experienced trader. You will need to be able to do these three things. So presuming you have that, let's presume you have, then we can start off looking for money-making opportunities. So And the first one, let's start with, is trading strategies. Now, there are a lot of very, very, very good strategists who are terrible traders. And I know I've spoken about this before in other webinars. It seems so logical that if you are getting the majority of your trades correct, that you will be a profitable trader. And it's just not the case. Remarkably so, there are traders who get 70% of their actual trading trades right and still lose money. And then there are great traders who get about 20% of their trades right and make fortunes. So, there's a big difference. And in fact, the latter, I'm sorry to be going on tangent here, but the latter guy, the guy who, makes all his money on the 20%, getting it right 20% of the time, he may not be very attractive to potential investors because he is the big punter I was talking about, a few minutes ago, the guy who, makes a lot of money and takes some big bets and really backs himself. But okay, reversing again, trading strategies. There are a lot of people who are really good at picking winning trades, without ever really making any money from it. On the other hand, there are a lot of traders out there who are pretty bad at picking good trades, but seem to have a good knack for trading. Now, there is a fast-growing industry in bringing these two people together. So, you go online and you're going to find so many great stories of these guys promoting themselves as, trading strategists, and they'll have pictures of themselves and they're outside of their carpet cleaning business, and they do strategies on the evening time. And anyway, there's a lot of pretty ordinary strategists out there. So for you to be able to set yourself apart from these, I'm not saying your strategies need to be fully audited, but they need to be in such a way that people can believe where they came from. Now, this could be, maybe a live account, which is specifically set up to allow people to see your strategies. And, it can be, the amounts don't matter, remember, on strategies. The amounts are irrelevant. It is only the success ratio we're talking about. So you need to be over 60% minimum. You need to be making at least 60% of your trades need to be correct. And risk-reward ratio, look, I don't think 1-to-1 is good enough. I think you need very close to 2-to-1 risk-reward. So if you are delivering strategies on a consistent basis, as I said, with 2-to-1 risk reward and over 60% of your trades are right, then you have a potential business, I believe. Again, you need to be able to demonstrate your strategy, explain it, and the risk profile is already in your numbers. That's easy to be seen, and everything you do about your business is consistent. If you have those three things, yes, you have a potential to sell your strategies to traders. Now, I'll answer questions at the end, please, if you don't mind. Just hold all questions. I've lost my train of thought again. Apologies. Okay. No, I'll have to start again. Trading strategies. Please hold all questions to the end, because I look across and I see them and they throw me. Okay, 60% profitability. Get 60% of your trades right. Have a risk reward on those trades of around about 2-to-1, and you will find a lot of people who want to follow you. Now, as I said, and I'm repeating myself here, you would think on those sort of numbers that you are guaranteed to make money. Well, if everything's automated, and yes, you probably should make money, but it's just remarkable that people don't. But remember, we've got, I believe in Japan alone, for instance, just taking one country, we've got about 1.7 million retail accounts. I don't know what the global number is. We're talking between 5 and 8 million or something. At a probably rough estimate of retail accounts out there. Now, most people do not have the time to go through and study the technicals and the fundamentals and then what have you. So if you are good at picking winning trades and want to make it somewhat of an investment in yourself, you've got to create marketing material that demonstrates properly who you are, what you do, then you have the potential for a very, very, very profitable business. Now, licensing. Should you be licensed? My general answer to this is always yes. Why not? If you want to operate in this business, why don't you go and get a license? If you want to offer your services to others, why don't you get a license? In most jurisdictions, nonetheless, in order to provide trading strategies to others, it is not an absolute requirement for you to be licensed. And there have been, once again, I'm talking across jurisdictions here. There are a lot of different jurisdictions around the world, and everyone, acts a little bit differently. But in the main, with most of the major centers, it is not required of you to be licensed if you are providing what is seen here as a service to others, a business service rather than a financial service. So you are not giving advice, trading advice. You're not telling somebody that they must trade or they should trade. You are basically saying, I see this as a potential trading opportunity. So a lot depends on obviously how you couch your words, what words you use. But trading strategies as such are not necessarily required to be licensed. Now, access to market. This is the biggest point of all, really. Like any product, you could have the best product in the marketplace, but if nobody knows you exist, you're not going to sell very much. So you need to, in some way, generate an online profile. Now, be this attaching yourself to a successful FX portal, not mentioning any names, or that's the easiest way of doing it, and you provide content to a successful portal, and they in turn promote your service. And you can, of course, go down the line of spending $500,000 a month on marketing, but that's probably beyond the reach of most of us. So let's be realistic. It's impossible to compete with the big, the big banks and the big brokers for all those marketing dollars to get the online profile. So the easiest way is to create a professional aura around yourself, by having the right sort of material, and then by being licensed, of course, would be a set you apart from a lot of the others. But as I said, it's not a necessity. And then you attach yourself to one of the bigger portals. So you approach them, say, I will give you some content. In return for this content, will you please promote my strategies? And that's really how you go about getting started. So definitely, as a way of making money, the easiest way is to sell your trading strategies. Hang on a sec, sorry. I'll repeat again. Understand your strategy, understand your profile, and be consistent. Create some, good marketing material around that, and look at it and get licensed. Really, it is going to set you apart from others. As I said, it's not a necessity, but if you're going to operate in this business, just go get the license. So moving on, one step further is either the trade lead, trade follow system or managed accounts. Now, again, these are slightly different across all jurisdictions, so I'm going to try and stay as general as I can. A brief description. Trade lead, trade follow is an automated system or technology where the trader literally places a trade, and automatically anybody who has signed up will follow this lead. Now, the trade leader may be only trading one lot, and the trade followers could be trading 50 lots. There is no set requirement. That is up to the follower to decide how much they follow the trade leader with. This has become very popular in recent years because most of the big regulators have given out rulings or decided that this is not necessarily, licensing is not necessarily required here for the trade leader. And that is, like similar to the trading strategies above, the follower, once he decides to follow the leader, even though it is automated, he's making a decision to follow it on an automated basis, and he has the ability, to opt out of that automated following, and literally it could be a case of the leader says, okay, I'm going to do this, and the follower decides whether or not he wants to follow. And that is why a lot of the big regulators have deemed that this trade lead, trade follow programs do not require full licensing on behalf of the leader. So that has made them very, very popular. I mean, I'm not going to go into and promote some of the various providers, but you know them all. They're on. They do a lot of marketing, and they're on. Most of the big platforms will have them, and they do some heavy marketing. Along the lines of, if you're not making any money yourself, why not follow one of our great trade leaders? Seems great in theory. In practice, very, very difficult to find a good trade leader. I certainly haven't come across very many of them, and I've been around for a while. So again, it's on behalf of some of the bigger platforms, it is definitely a marketing ploy. Right. So again, from the trade leader's perspective, if you are good enough here, once again, you need the marketing material will determine whether or not you get a lot of followers or not. So you need some good material which explains exactly what you do on an intraday basis. And the intraday traders here are much more popular than the more medium-term guys. Personally, I think this has a lot to do with the platforms pushing the short-term traders more, because obviously it's going to generate much more turnover for the platform, and that's why they tend to promote the short-term leaders as opposed to the more medium-term guys. But on a daily basis, the leader will, just do what he does. He has his own account, he trades, and every time he trades, his followers will automatically place a trade. As the leaders get bigger, this is going to create some liquidity issues, of course. If you are the leader and you've got 1,000 people following you, and with it could be 50 or 100 lots. Some of the lots could be quite sizable. The broker is simply not physically going to be able to clear every single trade at the same level. It's just the nature of the business, and creates a lot of slippage. It creates slippage on the way in, and it creates even more slippage on the way out. So be wary. You'll find a lot of them. The trade leaders and their performance profile looks so good on, in theory, but in practice, what they suffer a lot from is slippage. And the followers, while the leader might still be making, or seem to be making, quite a bit of money, he's not suffering the same slippage that his followers are, and that can, the leader could be making money and the followers actually losing money, and I've heard of cases of this happening, particularly in the very, very high turnover traders. Nonetheless, there's a big market for this. As you can imagine, a lot of retail, traders come in, open an account, lose their money, open another account, lose their money. Third time round, they say, well, maybe I'm not so good at this. I'll open an account, but I'll put half in my account, and with the other half, I will follow somebody who's good at what they do and see if I can get some, good insights just by following them. So very heavily marketed by the big brokers, and I think this is an area which is only going to grow. Now, even though I said licensing is not a requirement, I'm not sure this is always going to be the case. And so, look, I know I sound a bit like a broken record, but if you are going to operate in this business and you want in some way to offer people a financial service, you need to be licensed. And if you are, if you want to be serious about this, you want to issue good marketing material, we're not talking here about 50 or 80 grand licenses to set up a hedge fund. In a lot of cases, it's going to be much, much, much cheaper than that. So I would consider the cost of doing business, and if you're serious about, getting involved and get a license. You may not need it today, but you more than likely will need it, pretty soon. Marketing materials, same sort of thing applies. If it's a cost of doing business, cobbling something together and saying I'm a gun trader, give me money, it's not going to set you apart from anybody else. You need to be able to demonstrate to people and tell people what your strategy is. You need to be able to tell them about your risk management profile. You need to tell them about yourself, who you are, all of this stuff. And if done properly, it just sets you apart from everybody else, makes you look professional, and you will find a lot more people willing to follow you. A bit different here. The access to market here is different to, like we spoke above. Like on the strategies, you really need a good relationship with a portal. Bigger portal, the better. As a trade leader, you need a good relationship either with a broker or with one of the firms who provide this type of trade lead software. So, look, again, I'm not going to do any promotion for them, but you can sign up with them online. I think they even take demo accounts as suitable for a track record, which I think is absolutely laughable, because we all know that trading a demo account bears absolutely no, it's got nothing whatsoever to do with how you're going to trade when you're trading real money. So nevertheless, look, that's their business. So you can sign up with some of these guys. You get even with a demo account, they track you, and then you start creating your profile. Now, the profitability profile here is it's a little bit different to, what we're going to talk later about in the institutional world. Just briefly on the institutional world, if you make 1.5% per month on a regular basis over a sort of 12 to 18 month period, and with relatively low leverage, you will be a superstar. And you will have vast amounts of money to manage. In the retail world, if you tell somebody you're going to make them, 20% per annum, they are not particularly impressed, because they're expecting you to use more leverage. Now, the problem with leverage is that it brings risk, and if you're leveraging somebody's account 10 or 20 times, it's going to create a lot more risk. So the trade lead, in a way, it's a bit like the trading strategies that we looked at above. It sort of suits, the type of person who's going to do well in the trade lead. It sort of suits the guy who is a good trading strategist, because he can just put on his, small account. It doesn't matter how much it doesn't matter really how much he trades, because it's the followers can decide how much they want to follow him with. So if your strategies are delivering, if you're getting 65% of your trades right with a 2-to-1 risk management, you will probably have a lot of guys following you. Yeah, you'll have a lot of retail people sign up and follow, and as they start to make more money off you, then they will start to increase the size of trades that they implement. Which brings us on to fee structures. So once again, these are different with various people, but in general, you will get a management fee and a performance fee. Now, for a start-out trade leader, I think you can pretty much forget about having any part of the management fee. The program or provider that you sign up with may charge a management fee to set their whole business up, but you may not get any part of this. And look at it, I don't have a problem with that. If you have no profile, you get no management fee. You know, a big hedge fund like Julian Robertson or some of these guys in the past, they used to charge 6.5% management fee, and that's before they charged the commission. But they could afford to do so because they had a tremendous track record behind them. As they start out in this business, if if somebody's giving you a start out, a point to start, and you're not getting the management fee, I think that's probably fair enough. So. Sorry if I'm jumping around the place here, but the fee structure, in general, there's a management fee and a commission. As a beginner in the trade lead, trade follow business, you will probably not get any part of that management fee, but you will more than likely get something around 20% of all new profits generated by your trade ideas. Yeah. So as you can see, depending on the size of people who are following you, again back to my exaggerated example, but if you have 1,000 people following you and they are each trading 5 lots on average, and your trade ideas are generating, a lot of pips, then you're going to make a lot of money, no doubt about it. That in itself is going to lead to issues, like I mentioned earlier, with slippage, because the bigger you get, the more slippage is going to come into it. But as a starting, and I think you just need to be realistic. There is a size that you can grow to and probably not go any further. But as a starting out point, if you feel you have, the ability to and again, it's sort of like the trading strategies above. You don't have to be a great manager of money to do this. So as a starting out point, as a trade lead, trade follow, find out some of these programs, and it's probably not a bad place to start. Okay, so managed accounts. Now this is the other area of the retail world, probably not as heavily promoted as the trade lead, trade follow. But nonetheless very popular with retail investors. So difference here is that the trader has pretty much total managed, like control, if you like, over the account of the investor. So the trader decides, obviously, on every trade and the amounts that are going to be traded. So let's look at it this way. I am, let's say, I've got the managed account. I'm the managed account. I'm the manager, and I've got 50 people who've put money into this structure. Depending on the percentage of the total pool that each investor owns, then they own a percentage, if you like, of the profit and the loss. But as the trader, I am deciding the size of trade that's placed at any one time. How many trades, what the stop is, what the profit target is, size of, etc. So it's a much more, the trader has a lot more leeway, much more, he's got much more of a decision maker in this process as opposed to the trade lead, trade follow. And fair enough, this requires licensing in order to. As far as I know, I don't know every jurisdiction, but I don't know of any who allow, traders to manage accounts for the retail market without having licensing, without being regulated and licensed. And it is not a, just the lowest level of licensing. It is, CTA, I think, is probably the minimum that you can get away with. So from the NFA, the Commodity Trading Advisor, which, just on a sort of a bit of a sidetrack, if you are thinking about having a basic license just to operate in this business. The CTA from the NFA, so the National Futures Association, Commodity Trading Advisor, anybody on the globe can do that, and that is definitely the easiest entry-level licensing to get. Now, that does not mean that if you're, for instance, sitting in, I don't know, the UK, and the CTA may not be recognized as enough to manage accounts, but in certain jurisdictions it might. So that's something, depending on where you are, you would need to look into that yourself. But you have, let's presume you've got a strategy, you've got a track record, obviously, you've got a consistent strategy, a consistent risk profile, and you are able to provide, you've got some nice marketing material outlining all of this. You go and get your basic license from your regulator, and again, like in the trade lead, trade follow, you approach your probably one broker to begin with. Let's say you have a friendly broker. Maybe you've generated your track record over a number of years with this particular broker, and you say, okay, I want to now promote myself as a managed account manager. So this is your starting point. So again, it's a step up from the trading strategies and the trade lead, trade follow, but as a preemptor, before you enter the professional institutional world of managed money, it is definitely a really good place to start. You can manage liquidity much better. You can manage slippage much better because you are in charge of every single trade. You can, like on the trade lead, trade follow, once you place a trade, everybody automatically followed, and there was you have very little control over slippage. In this case, you are, for instance, entering the market with a set amount. Even if this is a large amount of, I don't know, say 1,000 lots or whatever, you can ease your way into the market. Yeah, as the manager of the entire pool, if you like. So it gives you you've got much better control. It allows you to manage larger amounts of money than the previous, the trade lead, trade follow. So it's definitely you're becoming a professional manager at this stage, and so you obviously need to be licensed. Your marketing material needs to be top notch. Your access to market. Then again, this is back to you have a relationship with one or two brokers, and they, in essence, they promote you. So you do very little promotion yourself. That's the good part about this. And the broker, if you have a good profile, he's going to be keen to market you to his database. So you can, and I've heard of some in recent times who've been relatively new managers managing $50 to $70 million, and that's before leverage. So that's a sizable amount of money, and then they're not using massive amounts of leverage, but they could be using 5, 7, 8 to 1. As is the retail world, they're slightly more aggressive, so that definitely gives them a lot of punch in the market. Now, your profile here, again, it's the retail world. So back to the institution, if you're delivering 1.5% per month, a regular basis, you will get almost unlimited amounts of money arriving at your door. In this structure, if you are delivering a consistent monthly profit of, I'm picking numbers here. It's a bit, again, it depends a lot on the type of trader you are, but anything over 2% per month on a consistent basis, I think you will be knocking back money pretty quickly. So may sound easy, but it's not. Anybody who's tried to do it will know how difficult that is. Keeping your losses off the books and having a consistent profit of 2% plus. Very, very difficult. But if you can, the fee structures again, 2 and 20 is what we call the industry standard. 2% management fee and 20% of new profits. So if you can generate $50 million in accounts under management, that's AUM. If you ever see AUM written, it's a sort of shorthand as for accounts under management, and you will be paid about $1 million a year for managing that money, and you will be able to keep your business will be able to keep 20% of all new profits. By that I mean, if you lose some money on an account, that account must regain those funds first. Yeah, so it's only on profit that the 20% is paid. Yeah, so as a precursor to entering the professional world, if you like, the true professional world, managing accounts on retail platforms is definitely your third step. Yeah, so we're getting close to the end of our time today. I think that pretty much covers what I wanted to say about the retail space. And yeah, as I said, I'll have a look now at a few questions. But if the questions are sort of specific to yourself and your situation, why don't you just go to the FXWW website? Here it is again, and just contact me and just send me a question that way, and I'll answer over the next few days in more detail. And next week I will look. Yeah, I will presume that we have graduated from this stage. You may have even bypassed all of this and you want to go straight to work for a hedge fund, or you want to go straight to work for a bank, either as a trader or a dealer, or you want to set up your own professional trading business, or you want to be a hedge fund with probably offshore and onshore entities. So I will deal with those issues next week. So yeah, I think that covers us for today. So yeah, thank you very much for attending. Cheers.